It is my pleasure to welcome you on this today's panel discussion on sustainable growth, balancing risk and innovation in digital transformation. As we navigate this era marked by rapid technological advancements, the impetus on businesses to transform digitally has never been more pressing. Yet, as we embrace this wave of innovation, it is also important to manage and understand the risks that come along with it. Today's discussion has brought together a group of diverse experts who are going to share with us their insights and experiences on how do organizations effectively manage the risks and innovation. So let me introduce the panelists quickly. We have Mr. Tejas Shah, who is the Chief Information Officer for L'Oreal India. Mr. Vivek Gupta, CTO CoinDCX. Mr. Dushyant Bhatt, CTO and Product Officer, the Hosteller. Ms. Vaani Chugh, Co-founder and Director, Chica. Mr. Rajesh Choudhary, CIO for CSB Bank. And Mr. Sanjay Tripathi, Head of IT for Bestseller. So, go to the discussion. My first question is to Vaani. We'll begin with you. How do you define sustainable growth in the context of digital transformation? And why is it important for the businesses today?
The digital transformation is something that's an evolving field. There's AI and it's constantly learning. Whatever you're putting in as input is what it is learning. And for businesses like us, I'll talk about ours in particular to give you the flavor. We are a D2C brand. For us, digital transformation comes in two aspects. One, when you sell on marketplaces, it's their algorithm which is learning from us and what we are teaching it. And when we are embracing that digital transformation, we have to make sure that our metrics are in place so that our risk would be not keeping our unit economics in place, losing money there. Our risk would be how much of our data are we sharing, how much of our data is going there, our own data privacy. And the second part of digital transformation is what we are learning about the customer through multiple AI tools that we employ on our website, where we are extracting customer data. The two factors of risks involved there are, of course, leading to data privacy of the customer. We need to respect that, how much data are we pulling and how are we using the data. And the other risk is, because there's so much available, there are so many tools available, how much do you invest in which tool? What kind of ROI is it giving to you? So those are the risks that you have to factor. That's a thin, the thin line of balance that you need to work on. For us, what we've learned over the years is that when it comes to teaching what you are essentially understanding what the multiple marketplaces algorithms are learning from you and using it in the best interests of your business, it would mean that you decide at what level you want your growth to be at, what it cannot be growth at all costs, what kind of growth are you comfortable with, and to what extent can you balance that growth with your unit economics. And part two of it, which is when it comes to pulling out data from the customer and using digital transformation and AI tools to get your customer data and to figure out what tools to use to make sure you're maximizing the ROI for your business and you're keeping your risks to a minimal. There, I would say a balance, of course, comes between the ROI of each particular tool. What exactly are the metrics that you're tracking through that tool? Is it, to get a bit into specifics, is it conversion? Is it your click-through? Is it how much revenue is that particular tool driving you? Or is it what kind of data is that tool giving you? And the second part, of course, is that all your compliances have to be in place because data privacy is very big with the customer.
Thank you, Vaani, for I think sharing different perspectives. I think this gives the right direction to the conversation today. And my next question is to Tejas.
Thanks.
What are some of the practical strategies for enterprises to create a culture that embraces both innovation and responsible risk management?
Absolutely. And So for us at L'Oreal, we are about a 150-year-old organization. It's a global company, 37 global brands with us. There's a lot of legacy that we carry with us and so on. So there is no one simple answer to say how do we, but what is really important when we talk about innovation and risk management associated with that is how do we ensure that holistically we are able to keep fueling in or keep pumping in the innovation ideas? How do we keep our teams motivated about how innovation works and what impact it is making? And at the end of the day, it's all about the customer or the consumer in the center of it. So if I have to summarize, how do we manage, or some strategies to manage, is if you keep customer at the center, and then we talk about people, process, technology, and sustainability. And when I talk about sustainability over here, I'm talking about the climate, because with so much of digital explosion, we also have to be cautious about the impact we are leaving behind in terms of the carbon and greenhouse gases that we release. Now, specifically speaking about people, so it's really about how do you educate your people about innovation? How do you embrace and adapt new ways of doing innovation? So, for example, we are training almost 1,000 to 1,500 people every year on product management. And when I talk about product management, I'm talking about digital product management, which is basically putting the problem we are solving in the center of this thing and so on. So upskilling, change management, and adopting new ways of working as far as people is concerned. Processes around how are we making sure we are managing risk, data privacy concerns, how are we approving, or what's the ROI and so on, and what is the governance behind it to have the right kind of investment behind the right, because when you have 200 ideas, how do you select which idea you want to bet on? And then within processes is also, when we talk about innovation, it's really all about autonomy also, because when you have to do innovation, the rule we have is simple. You try fast, you test fast, but you fail fast. And to fail is okay. And that's extremely important, and that's embedded into our process. But the only problem and challenges which we have seen in the past and we have adapted is when we have an innovative idea, we probably just stretch it too long. It really has to be like, okay, let's put a date to it or put a target to it. 16 weeks, 12 weeks, whatever it is, depending on what we are trying to innovate. But at the end of it, it doesn't work, we move to the next one. You keep on trying, you keep on burning money, you keep on burning resources, you will have a demotivated team, and at the end of the day, nothing comes out of that. And that's really the process angle of it, which has to be extremely, and this is then really an effective strategy to handle innovation and risk, because risk then of is you burned already too much cash, or you have already invested way too much on that. Third is really very important, again, is technology, and especially for organizations like ours, who have a history of 100, 150 years. We have 50% of our technology which is outdated, getting modernized, and 50% is new one. And then we have all these digital innovations coming in and so on. How do we ensure that we have the right technology strategy in place to be able to interconnect all of this, interconnect with our partners and so on, and having a very strong integration or an API strategy, what we call, becomes very, very handy when we talk about digital transformation. And the risks associated with innovation and failing reduces substantially when you have a very strong data exposition strategy or an integration strategy. So that's extremely important from a technology perspective. And last, again, is really also to keep climate in mind, what we are trying to do. Are we collecting way too much data? What footprint we are leaving behind is again important to think about, because customers are also becoming more and more climate and eco-conscious, and so are we. So we are responsible towards that. So it's also important to factor into your strategy of how much risk you are taking at what cost of to the planet.
A very interesting take on the overall process of innovation and the risk cycle involved, that if you want to fail, fail fast. Right?
Absolutely.
Bang on. So, Dushyant, I move on to you. What metrics or indicators should company use to evaluate the success of their digital transformation efforts in terms of sustainable growth?
So I think, as we discussed, or many times we have mentioned, right, business is a marathon, not a sprint, right? And same goes for digital transformation. It's not a very quick bite where you start transformation and start seeing the impact. Now, majorly, most of the companies see revenue as a direct indicator of the impact, that how much transformation, how much things digitally you are doing, and how much revenue is it adding or not. for so let's say any physical or traditional businesses come into the online with online presence and trying to increase the revenue. So one indicator for them is the what is the how much revenue is adding overall to the growth and how much what is the offline versus online revenue they are adding. That is the one parameter most of the businesses measure that, but that's not the only indicator. Now what we feel as a hospitality or travel category, the online reputation or the customer experience plays a very critical role. And what are the digital touch points we are having? There are physical touch point for the travel industry and hospitality or any of the physical touch points which any of the retail business having. What are digital touch points we can create and how we make sure the customer voice reaches to the brand smoothly or seamlessly. So that's the digital transformation which we try to build it. There's a in-house application which we launch, we call as a glue to streamline the communication between the brand and the consumer. So that and for today, I have hundreds of properties, and my customer has any issue. I can see that what is the issue they are facing at a fraction of a second, and that's what the transformation we try to bring on, and how we can resolve that issue within next 20-30 minutes. So that's what the transformation we try to build on. That okay, revenue is the one parameter where anyone can see the numbers, but how my customers are satisfied in terms of the experience which we are building for them. So customer paid us once, but what experience they are taking us, and that's the experience we want to build, which increases the overall LTV for the brand. Okay, so one is the direct revenue, then we can have a cross-selling, upselling, or higher LTV for the businesses. But how you bring that LTV depending on the experience you drive for the customer. So for that's what they take for us when we consider the outcome of transformation.
A very valid point coming here is that metrics is not only about quantitative, it has to be also qualitative, where we look at the customer feedback, we look at the customer kind of whole experience when they work with the brand. Great. Regulatory requirements impact the balance between innovation and risk. And what steps can companies take to ensure compliance without stifling innovation?
First off, thank you for having me here today. For everyone's context, CoinDCX is a crypto trading platform. So we enable people to buy, sell crypto. So see, for us, compliance essentially started in a very different space because crypto happens to be an unregulated space where we don't have an official regulator. We had to build a lot of things ground up, right? So for us, we said it doesn't matter whether there is a regulator or there is no regulator. Managing the risk of our users and managing the risk of the platform should basically remain supreme. It's very important for us that we are able to manage risk. And so for us, it started off by creating a risk framework. So we basically said, okay, even if you don't have compliance guidelines, we're going to create our own self-defined guidelines. It started off with creating a culture for self-compliance. Which we then, being that we were one of the earlier players and one of the largest players in India, in fact, the largest player in India in the crypto space, we then started working with our peers, we started working with other exchanges, and we created Bharat Web3 Association, which works closely with the policymakers, which basically tries to create a framework for how crypto can actually be regulated, because the technology in itself is so new, so unique, that some of the standard practices that you would expect that apply for typical traditional finance worlds would actually not apply to us. Right? So because we operate in a very different fashion. Also because technology is very nascent and technology is very, very new, a lot of things that you would expect a financial institution, other FIs would have, is not typically available to us. Right? As an example, a traditional finance broker could rely on an NSDL or CSDL to do their demat accounts. Right? So the custody of the asset is with NSDL or CSDL. So in a way, your broker is not responsible for how the assets are custodied, and so therefore the risk for that is not with them. In our case, we don't have any intermediaries, we don't have any asset holders, we don't have any of that. So we basically make everything, right? Be it exchange, be it brokerage, be it custody, almost everything has to be built ground up by us, right? And everywhere you go, there is a risk. Most importantly, in the crypto world, because crypto is a liquid asset, it is basically anybody, it's equivalent to a cash. Anybody who has access to that asset, who holds the asset, it belongs to them. Unlike, say, for example, your INR, etc., where majority of the funds is basically in a bank, registered in a person's name, it's not as liquid of an asset as, for example, a crypto asset is. And so, For us, we basically said risk is important, compliance is important, ground up, and therefore, for us, innovation and compliance or risk management or regulation, etc., were never in competition. We said everything that we are going to do, any innovation that we are going to do, the innovation will basically be built around the risk parameters in order to protect our users and in order to protect the platform from any sort of risk parameters. As an example, we are one of the first entities in India to have created a crypto listing framework. We created a framework called as 7am, where we basically defined what is the parameter based on which you would actually list a token for trading. In traditional finance world, that is something SEBI would do. SEBI would basically go out and say, okay, these are the parameters based on which an exchange could list. We didn't have those guidelines. So we learned from traditional finance worlds, modified it for crypto world, and then we basically applied it here. So how do you balance, for me, compliance, regulation, risk checks, and innovation? You start off with a mindset. You basically start off by saying that these are not in competition. We basically need to make sure that we are able to innovate without compromising risk, and we are able to handle risk through innovation. As an example, in crypto worlds, you have something called as rug pull. You basically have situations where a token completely goes bust. The value of the token can go zero. That is a direct risk to my end user. How do I ensure that my end user is not exposed to this? We've built AI algorithms which can predict. We have also integrated with third-party partners who could predict a rug pull. And so we notify our users, we basically help them protect their assets. It's also very possible that some of the smart contracts are on blockchain. Smart contracts can basically be hacked. People would not know why they're interacting with those smart contracts, how they're interacting with those smart contracts. And so we've also integrated innovative technology there, which basically assesses the smart contracts and clearly notifies to the user, if you're going to interact with the smart contract, these are the 5 things it would do in plain English, right? And so for us, innovation was needed to handle the risk itself. So they didn't necessarily come in direct conflict with each other. Not to say that there are no friction points. There are friction points. The friction points such as when you're trying to onboard a user. When you're onboarding a user, how much KYC data do you take? How much of inputs do you take from the user? How do you basically make sure that the user is able to access the platform without going through a very rigorous or a difficult to do journey? And so all of that is something that we had to continuously sort of manage. Handle the mindset, build technology, use technology to solve the problems of risk, and do innovation in order to make sure that you're able to handle risk as well as compliance together. That's how it has panned out for us.
I think the key takeaway here is that how technology and risk can complement each other in identifying use cases where technology can help bring down my risk, and what are the risks of getting a technology built into. I come back to you. Now, given that India's IT sector is expected to generate around $350 billion of US revenue by 2030, what role do you foresee for digital risk management frameworks in ensuring that businesses don't just innovate but also secure their operations and increase with the increased digitalization?
Thank you. I think everybody sitting in this room has got a banking account, right? No brainer, stupid question. So you keep your money with the bank and you trust the bank that bank will look after your money, right? You don't give a damn how the bank is doing risk management, how they are launching products. The mobile banking need to look incredible. Net banking used to be very efficient. If you want to apply for a product, personal loan, click few buttons and the personal loan should happen. The home loan should be less painful, right? Now, when you want all of these things, banks have to innovate to make your experience with the bank very seamless or pleasant. For banks to do that, they have to look at new technologies, new processes, new journeys, and implement these in their existing systems. And sometimes, because the competition is hard, the same banks are looking at all of you for making you their customers. So we try to do things faster, but at the same time, we have to ensure that we do not introduce any risk and we look after the money of thousands and millions of customers what the bank has. That's a very fine balance, and thank God we have got regulators. RBI is one of the finest regulator in the world. They keep us on toes. So from the banking perspective, we follow something which is called 3 lines of defense from the risk management perspective. So everybody working in the bank has got the responsibility to ensure that we protect the money of the customers. Doesn't matter whether the person belongs to business, operations, technology, risk, compliance, audit, doesn't matter. So everybody is responsible for risk and they are the first line of defense. Second line of defense is our risk management function. So there is a role which is called CRO, Chief Risk Officer. They have got a set of people responsible for financial risk, liquidity risk, technology risk, operation risk, and all kind of risk. So they are second line of defense. They ensure that all the respective functions are doing things in an appropriate way. If we have got, let's say, 100 crores from the customers, then I cannot lend 110 crore, right? So just to ensure that we are lending responsibly and all the ratios are being managed appropriately. The third line of defense is called internal audit. So if something passes the first line of defense and for some reason it passes the second line of defense, the internal audit is doing audit on a daily basis of our branches, technology processes, operation processes, and all different processes which are involved in doing banking. And if they find any gap, they take the decision, they stop some of the processes, escalate and ensure that those risks are mitigated before any incident happen. So these 3 lines of defense ensure that the banks manage their risk appropriately. When we are innovating and as by 2030 we are expected, India is expected to be 7 trillion economy and 350 billion out of that is expected to come out of the IT services. It's a big number, gigantic number, and so it puts quite a lot of responsibility on the banks from the risk management perspective. I think we are very robust, be it my bank, CSB Bank, or any other bank in the country. I think all the banks are very responsible. They follow RBS guidelines, so your money is safe in our hands. Thank you.
Good to hear that. I think the regulatory frameworks that we have in our country, and especially with banks like yours and other banks following that to letter in spirit, will ensure that the money is always in safe hands and we are always saved of these cyber frauds and other things. Great. Coming to you, Sanjay, now. Coming from the apparel space. So, what are the current trends in digital transformation when it comes to retail and e-commerce?
Thanks, Sumit. Thanks, Sumit, for having me here. The retail is, I would say, not very isolated in terms of, let's say, the digital trends. But if I have to name, few trends which are, let's say, in and probably will, help businesses, right, to drive, let's say, revenue or profitability. The first and foremost which comes in my mind is being an omni-channel. Now, the customer has become, very, very demanding in terms of, let's say, your presence or your availability and, kind of, experience what you provide. And I was talking before coming on the panel, most of the customers, right, they expect the best experience from you, which they probably, encounter some time back. Let's say if Amazon has floored them, right, by delivering the product in, let's say, 2 hours or 3 hours or for that matter, or so then they expect that, whoever XYZ they interact with, they want the same or the better experience. And And that's where basically the omni-channel comes into picture. So when I say omni-channel, let's say, we operate brick and mortar where we are there in the malls, we are there in the high streets, we are there, let's say, on our D2C side, we are there on the likes of Mintras and Ajios and now the next thing is probably, we'll be there on the likes of, the Blinkits and the Jeptos, right? So when you are there across channels, wherever you interact, right, you interact with the brand. So let's say if you are, visiting our store and, buying a Jack and Jones jacket or Jack and Jones, pair of jeans, the kind of experience, the kind of, variety what you get in the store, probably you would expect the same when you are there on the website. Or you are there on the Myntra or you are there on the Ajio and for that matter, if we start selling on Zeptos and Blinkit, right, they're also the same variety, same assortment, similar pricing, similar discounting. So how to become a truly omni-channel retailer, that's the first and foremost challenge, right? And that's where the technology helps us. How you make sure that, you have the same kind of inventory across the channel, how you have the same, let's say, discounting, how you have the same promotions being run across the channel. Your customer should not feel that, if I'm buying Jack and Jones from Myntra, probably, I am getting cheaper compared, when I'm coming to the store. Probably they'll stop coming to the store and vice versa. So the first and foremost, basically that, you provide a very consistent experience across the channel. Become a truly omni-channel retailer, and that's where we have advanced the journey, and most of the retailers they are also working towards being a truly omni-channel. So that's the first trend. Second, I think we were talking about it, and now we are living in the age basically where Gen X and Gen Z basically they are there, and when we talk about them, I think we can't leave the sustainability part. Right? The Gen Zs and Gen X basically they are very concerned about what they are consuming. There were baby boomers and earlier generation where we were just talking about the product. The product looks good, the product fits me. It is all that, it is priced well, I am getting a better promotion discounting, probably I'll go and buy it. Gen Zs, Gen X, whatever we call, Gen Alpha, we call it, right? They are very concerned that, if this is the jacket or this is the denim, how much water has gone. From where the cotton is sourced, right? And if cotton is sourced, whether it is organic, inorganic, so I think that's where the world is moving, and it is not only the apparel, right? Whatever they consume, you want to have the footprint, and then the footprint should be, very sustainable. And sustainable, I think it is coming in India, but if you look at a European market, probably the American market, where the Gen Alphas and Gen Zs are basically defining the need. Sustainability in everything what we do becomes very important. So for me, top two trends: omni-channel and being a sustainable in whatever you do.
Thanks, Sanjay. Vaani, would you want to come in here since you also come from that same space of apparels and dealing with the same user group? What's your take on sustainability within your sector and how people are looking at sustainability driving digital transformation?
I'll just take off a little from what he said, how customers are behaving. I think previously the theme was deals, discounts. Right? Now what the customers are looking at is speed, thoughtfulness. And sustainability becomes a part of it. So sustainability has to reflect in everything. When you're selling something, then your packaging. Is it looking like it is, are you using too much plastic? Are you harming the environment? It starts from there. Then the product. I said, is the product responsibly sourced? Who was impacted when you sourced the product? Is it organic? Is it going to feel good on my skin? What is the cost to the environment? For example, we do reusable period pads and reusable period panties. And when we think of sustainability, the common thing is, it's more of a metro thing. The bigger cities, people are more aware of it. But when we launched it, we realized that maximum sales were coming from towns like Bharinda, Ludhiana, Punjab, Udaipur, Jodhpur, and for these particular products. Why? Because that reusable period panty aspect, you have to wash it and reuse it again, was something that really resonated with people there. So it is all across India. It's not a metro fact that sustainability is very important to this younger generation. So how brands not only capitalize on it, but also make sure that you show that you're sensitive to it is up to us.
key messages here is that now people are aware about sustainability. They are looking at sustainability in every process, in everything that they do. And it's not only the Gen Z, it's also the millennials like us or the other generations which are now understanding the importance of sustainable environment and sustainable processes. Uh, uh, we have some time, so I'll come back to you, Tejas, again. Uh, what role does leadership and governance play in ensuring the balance between innovation and risk is maintained, especially during periods of rapid technological change?
It's an interesting question because leadership, I talked about it in my previous response also. Leadership is extremely responsible over here in terms of really supporting innovation, sponsoring innovations, and most importantly, is patting in your back when you fail. It's fine to fail. I think leadership plays a critical role over there first to make sure that innovation, because the moment you start blocking innovation, the moment you start blocking ideas, you are not heard of, your pipeline of innovation fuels will go down. So it's really important that innovation is, the leadership is open, the leadership is fine to fail, and they're supportive of this thing. Secondly, of course, leadership needs to be sponsors of innovation. So what's the kind of budget or what the kind of dollar or what the kind of rupee you are allocating year on year for innovation? It's really important to have something. Every product services company, they spend billions of dollars in innovation, whether it's apparels or anything, when you want to find a new product or services. But there has to be within that a specific bucket for digital innovation, because that's really very important, and that's where leadership play a key role on that. And the third place where leadership plays a key role is really facilitating and selecting what is the best out of the 20, 40, 50 ideas or innovation that is there and what makes sense. Now, how do you select that is where governance comes. And what are the governance? Of course, it can depend from many organization to organization and so on. But at a high level, if I have to summarize, there are 4 or 5 areas where you should critically evaluate each of your innovative ideas. One is how consumer-centric it is. So to what my fine colleague over said, it's really how consumer-centric the idea is about, how sustainable it is from an eco perspective and from an environment perspective. What kind of tech and data leadership this is giving to you. How much data you're getting with this innovation, because it's really important to evaluate that and to understand what kind of leadership, because when we are talking about digital transformation, digital native organization, a lot of perception about your consumers and your customers is based on how digitally modern you are also. So it's really important that you evaluate critically on this third parameter on that. Fourth is really about agility, how agile your innovation is going to be, because it's rapidly changing. Tomorrow, if something changes, how fast I'm going to be able to change that. And fifth is least but not least, is really privacy by design. So that's where all the risk, a lot of risk when it comes to consumer organization. We have to embed privacy in the design itself. You cannot think of building a product or an innovation and then think, oh, how do I think about privacy of my consumer or my customer or my employee or whatever. It has to be by design. It has to be within the DNA of everything that we do, to be sure that whatever we are doing is ethical. Whatever we are doing, we are protecting the rights of our consumers and our customers. So these are some of the areas where leadership, how they could sponsor, and the governance, which helps eventually selecting this thing. Of course, you can frame the way you want for your respective organizations in the context, but these are high-level pointers on how you could go about driving governance and leadership in combination.
Having a leadership which creates the overall vision and then prioritize and then privacy by design are some of the key takeaways that I take from this question. Coming back to Vivek, some examples on how your organization is balancing innovation and
I think in my previous answer, I covered several of those things. Like, for example, the trading risk associated with rug pulls. I think I'll cover a couple of other things then. See, one of the things that happens in crypto is actually a very volatile market, right? So essentially, your prices go up, your prices come down, which essentially creates a very obvious risk on your platform's availability, right? So how reliable is your platform, because the market is actually moving really, really fast. So there we have actually created a very innovative algorithm Yeah, so we need innovation here. Okay, so we've basically created an algorithm which is able to predict the volatility of the market. It's not like we are able to predict the prices, but we are able to predict the volatility of the market. And based on the predictions of that algorithm, we actually make changes. We have actually SOPs, both on the operational front as well as on the technology front, that ensures that you have a more reliable, more continuous platform that is available to you. And so essentially, any area, be it consumer protection, be it platform protection, be it security of the assets, for us, the guiding mantra at CoinDCX is security by design, as was highlighted, and risk controls by design. Consumer first. So if you are a consumer first company, the critical part of that experience is also to manage their risk and ensure that they remain protected at all times. And so consumer first is actually not a competition between creating a smooth, seamless experience for the user and protecting the user. It is actually a combination of them both.
Great. Thanks, Vivek, for doing my job and summarizing the whole panel discussion also. I think we have already shot over the time. Thank you, everybody, for joining us for this panel discussion. It was really enriching and great learnings to take away. One from the audience, if we have, for the panelists. Yes, sir.
Question is directly to the man who's into cryptocurrency. Crypto has touched 100,000 US dollars and it has seen a unblemished one-way street upwards the moment Mr. Trump came to power. There is a feeling or an atmosphere that Mr. Trump may securitize crypto as a second or an alternative US currency, looking to the very, very delicate fiscal imbalance of the US state. What are your thoughts and comments on that?
So we are looking at a US with anticipation and positive expectations of US now leading the way in regulating and creating a framework for crypto. There have been a lot of talks, like one of you mentioned, they probably could create BTC as a reserve currency. There is also talks about US taking a focus on crypto to prevent de-dollarization, which is actually a pretty typical theme. There is also talks about actually countries who are in favor of de-dollarization also prefer BTC. For example, all the MENA region, etc., which have oil as an asset, and they are focused on de-dollarization. So a lot of geopolitics associated with BTC. But net-net, we are just looking with positive anticipation with where it heads. We are also very positive about regulations and how the framework will come up in India and most of the other countries in the world, because we do believe that having a policy around crypto, even though it is a very complex to regulate asset class, creating a policy framework around this is critical for its mass adoption, and its mass adoption is critical for the true benefits of Web3 to be exposed to people. It has continued to remain a very niche area where majority of the questions that we get from our users is, what is crypto? How do I use crypto? Etc. So we want to be in a world where all of these questions go in the background, and the real power of putting the power of control of data and assets in the hands of the users actually becomes a reality. Because that still continues to remain a concept which is not actually accessible to wide section of the users, without which the original idea with which BTC was created continues to not be a reality today.
One more question to you only, sir. See, I wanted to ask whether it's legal now to trade in crypto in India, especially in BTC and USDT.
I'm not able to hear you.
In crypto,
Is it legal to trade in?
because my question is that in somewhere I read that it is legal, then again they withdrew, again they allowed. Is it so?
So the only real indication that we have from the government is them applying taxation on crypto trading. So we have TDS, we also have GST, and we also have income tax to be applied on the profits that you make from crypto, which is a very clear indication from the government as to they don't want you to not trade. One. Two, we are also FIU registered. We are India's first FIU registered cryptocurrency exchange. In fact, globally, we are one of the first crypto exchanges to have been FIU registered. Our chief compliance officer has actually been created as the brand ambassador for crypto regulations and also In the FIU has basically flew us to Europe, where we made a presentation on how you can become FIU compliant for crypto, etc. So very clear indications from the government is to, there is nobody stopping you from trading crypto. We pay our taxes, all our users pay taxes. We collect taxes on our behalf as TDS. We deposit those taxes back to the government. FIU has basically given us a license. In fact, FIU has given us a license as a financial institution to operate in India.